Instead of looking for a total market crash, we're looking for what's called a great rotation. And that's what happened in the 70s, where the Nifty 50, which would be today's tech stocks, all went down 40 to 50%, over a period of 2 years. And you had the price of oil quadruple, gold popped, silver hit $50. And there was no Bitcoin back then, but Bitcoin's going to react the same way.
And good afternoon. Have with me again, Bok Kudla. I know you're excited every single time we talk because it gives us a glimpse into the economic future. You know what changed last month that's going to set the precedence for the next stepping stone that we move to in the future here. This is about a blow off top in China, real estate market crashing, stock market crashing. What'd they do? They pumped thousands of wheelbarrows full, a tidal wave of money back into their markets. They cut interest rates. So what's that really going to do for the global market in terms of commodities, on the industrial commodities that were being used? But then now we need to think about the inverse on where's the gold, silver, Bitcoin, oil trades. And, before we just jumped on here, Bob was saying it's going to be like the 70s, a repeat. So how can we profit from that? And again, the way the economy moves is the way governments are going to respond and the way your lives are going to be mixed into this. So, Bob, thanks for joining. I know everybody's going to get an enormous amount. Oh, and if you see me with the white fingers, I was bitten by a dog, and I still need to keep these kind of dry sutured for a minute. So if you see the white magic thumb moving through, that's why. Thanks, Bob.
Yeah, Dave, thanks for having me. So, we were talking before we got on and thinking about what we should talk about. And on Monday or Sunday, actually over the weekend, China decided to pull out their howitzer. They didn't even wait for a bazooka. And the Chinese economy is actually falling into the abyss. And so governments only have so many things they can do in the short term to kind of jack the economy. And what they're doing is they're opting towards the expansion of credit, which ultimately will fail, but also they're going to throw money at the problem, which will destroy their currency. But in the meantime, the first thing that always reacts to these events is that commodity prices in the local currency pop, and then asset prices pop too, because the cost of capital goes down and the desire to protect your assets from a declining currency goes up. So you got the immediate reaction of gold up, silver up, copper up, oil up. Bitcoin has been sniffing this thing out too since the beginning of September, when it went down, or end of August when it hit 49,000. Now it's on a sea wave that could take it up to 95,000 by January or February. If it follows that path, it could accelerate even faster from there. So we have this global liquidity surge coming in. At the same time, the Fed is cutting interest rates. Canada already cut interest rates. So they're synchronizing. They're synchronizing what I call really the last gasp. Okay, because inflation is going to come with this. They can't avoid it. People are realizing that all these currencies are really confetti, and people need to have hard assets to protect themselves. And everybody in the past thinks real estate's a good hard asset too, but it really isn't, because real estate requires a counterparty that's going to be able to afford the rents, right? Or you have a government that's going to steal the property through taxation, or insurance companies are going to steal the property through higher insurance rates. And then with inflation, you got maintenance costs higher. So you need something better than that. So the things that have the least amount of liability that's been proven in the past has been energy, gold, silver, and Bitcoin. They have the least counterparty risk. And oil, only because it's the biggest market out there, so big money can move into it easily. Gold and silver, because those physical commodities have no counterparty risk. And Bitcoin is the ultimate digital gold, right? So we expect all those to move in this environment, and they have been moving. Gold is every day hitting a new high. Silver starting to move now, and energy should have been falling off a cliff, but it's not. It's holding up, and then Bitcoin came down and it touched its weekly. We're going to show I'm going to show my screen a little bit so I can explain to people what it looks like from a chart standpoint. It went ahead and hit its weekly, what we call a Fibonacci retrace support area. Perfect hit. And it's moved up now $14,000 from there. And it's starting a C wave higher. So the bottom line is that, instead of looking for a total market crash, we're looking for what's called a great rotation. And that's what happened in the 70s, where the Nifty 50, which would be today's tech stocks, all went down 40 to 50%, over a period of 2 years. And you had the price of oil quadruple, gold popped, silver hit $50. And there was no Bitcoin back then, but Bitcoin's going to react the same way. Bitcoin, everybody was looking, what is the correlation to Bitcoin to anything out there? Bitcoin responds to global liquidity flows, offset by 10 weeks. And those flows started about 10 weeks ago, and you can start seeing Bitcoin is responding to that. And so we expect Bitcoin to keep moving higher. If I'm wrong, $49,000 is your exit. If I'm right, we're going to hit $95,000 by the end of the year. And my second view on this is that I think the market is sniffing out a Trump victory. And what happens there is you usually will get a follow through of good times until the inauguration. If Kamala happens to win the election, election night will start of a great crash in the stock market, because her policies are quite poisonous for economic growth, and people aren't going to wait around to see what crazy agenda items are going to be thrown at the markets, because they don't like uncertainty. So my go-to right now is global synchronized liquidity flows, help the commodities. Trump is likely to win the election based on the electoral college map as it looks right now. Market should stay elevated into the end of the year. And then 2025, no matter if Trump wins or Kamala wins, we're going to have a recession. And politicians don't mind recessions the first year in office, because that's the least damage to their administration. And you have, another year for the politicians to pump things up before they're trying to get reelected. So that's my view, Dave. And so far we've been trading that and playing that, and it's been working out for us. You're starting to see Wolf and Clean Spark start to pop again. Cypher's popping. Uranium's moving up higher. The energy names are doing fine. And once China starts importing oil again, which they have not been, you're going to see a surge in the price of energy. There's not enough supply out there to cover a demand increase.
And I'm wondering, with China being so in the quagmire right now with real estate and just their entire stock market valuations dropping off a cliff, do you think they would use war as a way to deflect from that and, get people to stop looking at the government itself? I mean, the war cycle seems to be around, and talking about energy seems to be an uptick going on again right now with Lebanon and this, so you got to start to add in some of these factors here of, how quickly could energy get cut off, and would a nation use a war to deflect from its own internal inefficiencies or drawbacks? And that people are starting to point a lot of fingers. I know it's a single party state, but it only takes so many people to not turn that into a single party state anymore. Everybody's going along because, again, the American dream was the Chinese dream, the prosperity. Everybody, Deng Xiaoping's time was living in what we consider poverty level, and then they brought them out of that in the Pearl River Delta and this massive, and what they see now compared to 40 years ago. Oh, so they're happy to continue on that social contract for now. But that social contract is starting to rip apart like ours is. So, put that all into context. There's so many things in flow right now. And, how long would it take or what kind of war would it take to disrupt energy across the Middle East? TradeWill2030.com. Take a look at more in depth of what we're talking about on trading side.
Yeah, look, here's my view on China is that China is on a demographic cliff, okay? And they're still suffering from the one child syndrome. So even like their conflicts with India, nobody has weapons. They have clubs, because the last time they shot at each other, 19 Chinese died, and there was almost riots in the street. because once you kill a son, you kill the bloodline. Okay. And family's everything in China. Family supplants communism in China. And so I don't think the Chinese are going to willy-nilly go into a kinetic event themselves. It's just not been their ilk. They know if they went at Taiwan, it would literally cost them tens, if not hundreds of thousands of deaths. Can they overwhelm Taiwan? Sure, but it'd be pyrrhic victory. And so, and they can never really invade it. I mean, they get over there, around every corner, they're going to be somebody shooting at them. So, and you live there, and so you understand that the terrain, people are just going to go into the mountains and just cause them great havoc for a long, long time. Plus, Japan's not going to stand for it. So Japan's not going to have a Taiwan sitting on its border that's hostile to it. So I don't think that's going to happen. And I don't believe China's monolithic at all. I think, there's a north-south divide in that country. And so I think Xi Jinping is walking on eggshells. And look, it's going to take you. I always joke about it just takes one famine to change the leadership in China. So I don't think that's the issue. Your issue with the Middle East is different, though, because if Iran ups the ante in Israel could take Iran's oil producing capability offline in 5 hours. And then you'll see oil at $200 a barrel. So everybody is walking on eggshells over there. And I think Iran knows that. And I don't think that's why Iran has upped the ante, because I'm sure Israel was very clear saying Karg Island would no longer be an island. It'll be the Karg crater. And that means no oil. And I'm sure Israel has contacted China and told China the same thing, saying, rein in your boys. So I think that's not going to happen. So, but I believe, though, the rumors are going to help it. So you'd only have that. So you have China demand, you have Middle East supply, and then you have the United States spending. And I think that's going to lift energy prices for us because it's also an inflation hedge. So that's my view on it. I think if Trump gets elected, he's going to calm down the Russia-Ukraine events, and that'll actually lower energy prices because we've been paying a Ukraine tax, but that's a year out. Okay, so, but I'm sure that's in his thinking. But in the meantime, I don't worry about that stuff so much. All I care about is how I can profit from it morally, and that's what I'm looking at with the charts I'm going to show you guys. So there's plenty of opportunity. In fact, this is the last time you're going to be able to make a lot of money on the long side. So take advantage of it, and I think you'll be really pleased over the next 4 to 6 months where some of this stuff's going to go.
Yeah, because you and I talked, what, 4 or 5 months ago, and you were calling market top right around this time into autumn period anyway, just using the same metrics that are, a little bit long. I wouldn't say long term, but sort of medium term outlook. And, this gold silver now. So walk me through this. So we have the regular, what you consider gold and silver ratio, and it always is varying between, I guess, the high when I bought some silver was like 120 to 1. It's crept back down into the 90s now. I think it's in the 80s. But if gold really eclipses $3,000-$4,000 an ounce, and then that gold silver ratio tightens, I mean, what are we looking at for silver? I mean, the demand with all these new solid state batteries and, this new tech that's going to require more silver, and we're not able to recover as much out of solar panels. And where is this going with the metals? Because in addition to the BRICS having at least one base layer of gold as a new monetizable currency, and I'm wondering if they're going to put silver in there as well, because it seems like China's gobbling a lot of silver, and they're paying $2 to $3 over spot price here in the US, and we just eclipsed $32 on silver. So there's a giant funnel of overprice and overpay to get those metals into different shores. So both of those, because I know a lot of people, it's much easier to buy an ounce of silver than a Bitcoin, and I know it's fractional, but still, to try to get 1/1000th of a Bitcoin or an ounce of silver, people are going to probably gravitate towards something in the metals arena. So, I mean, they're both symbiotically running as a pair down the same track here, but your thoughts on that?
Yeah, $50 silver. We'll hit the highs at this time. So, I don't buy physical. I like to buy the people that make the physical. So, and in fact, I just went through this with our subscribers today. Look, Heckler Mines is a great silver company. It's been we're already up 50% from our trade on that. And so, and then that's a U.S. based company. Coeur d'Alene Mines on the gold side, CDE is a good trade, and you have Mux out of Argentina. You want to be in geopolitically stable countries: United States, Canada, Australia, Argentina. I'm not big on the Mexican miners, even though they'll probably go up because I think Mexico will get greedy. Once they see price going up, they're going to want to capture more of that for themselves. So, the AGs and the EXKs, the Great Panthers, all those kind of companies are all in Mexico. And I think Mexico will have their hand out. So I think those will be more limited. So those are the ones I own. Who knows where this is going to go? I mean, once these blow off tops happen, it's unknowable. But I want people to realize is that you can have a blow off top, but the indexes can stay relatively flat because the things that are moving up aren't in the indexes. So just bear that in mind. So, you just want to be in the stuff that's moving. Now, uranium now is I think in its last innings. It's in innings 8 and 9, and there's probably a double left in the price. Before everybody gets satisfied with their nuke plants. And so, yeah, so I'm focused on where I can make money, and those are the areas. So Bitcoin, oil, gold, silver, but all the miners. I'm an equity guy. I'm not a physical holder because I held silver, physical silver at $30. 14 years ago, and it's just now I'm making money on that trade. In the meantime, if I'd have took that money and just bought silver miners and picked up the dividend or sold calls against it, I would have made more money.
Is there any way you could share some charts with us? Because I'm interested to see. You talked about what did you use the word upgrade for that, or a new iteration is a better term?
We have the worm, right? And so
show me the worm, and we're not talking about the bottom of a bottle of tequila. We're talking something a little different.
We're talking a worm that's much more profitable. And so we call the worm is the trade force indicator for those of you that are with us now that are listening. But coming to the end of October, I'm going to show Dave what we've been testing out, which is it's pretty much done. We're just going to release it in the next couple of weeks. No extra charge for people that are customers. It's just an upgrade. It's designed to catch the move a little bit earlier, to get you out a little bit earlier, and also to miss some of the false positives. So I'm going to flip over and show my screen, and I'll show you some charts, and you guys can see how it works in real time.
And with that being said, tradewith2030.com is where you're going to want to go to check that out.
If you come to my site directly at tradelikeagenius.com, you guys have been pretty good at it. Just tell me you came from Dave so I can give him credit, okay? So I support his work through your subscription. So it's a three-way win. You make money, I have a business, Dave gets to continue to evangelize. So I want to show people MicroStrategy, because MicroStrategy to me is the leverage play for Bitcoin. I day trade this one, or I swing trade this one all the time. And so I just kind of want to show you, these are the up cycles and down cycles. So the thing that you have right now, this is the worm, where you see it kind of the color movement. Okay, these are the areas where you had, see worm, you buy worm. But one of the things that we've done here is that, see right here, this would normally be a buy if you saw it catch it here. But now we have our basically our double check on this, saying this move will fail because this area here is staying in the red. Okay, momentum is non-existent, and the stochastics are below trend. So you would ignore this buy if you see that. Now, on the other hand, when this move happened here, okay, you noticed our what we call our combined indicator, all right, is flashed from dark red, which is oversold, to less oversold. And you have now a situation where you have confirmation. So a buy here and a buy here, and you're oversold. You would take the trade on the next move, which then happened to confirm with the worm. And you would have bought this at 142, and you would have stayed in that trade to right here, to 156. I mean, that's a beautiful double-digit gain. You would have avoided all this downside, okay, and you would have had another upcycle trade here, okay, and it came up and you would have got out here, you wouldn't have made much money, but you're a positive trade. And this is the last trade we took and we're in it, okay. I got my first warning here that, hey, this is a good trade. I got confirmation here. I'm oversold here. And the worm hit the next bar. You would have bought it here, okay, in which I did, okay. And now you're up 25% on MicroStrategy. That's not it. And if you want to day trade this thing, look at these day trades you can take with this, okay. You just look for the oscillations. You get confirmation, you hit and you pick it. So whatever you want to do. So that's not just that. So I like to look at trades a lot of time on the hourly. That was a daily chart. So you have an hourly chart here you can look at to look for these swings in the trades. And then if you look at Bitcoin, zoom out to the daily on Bitcoin, see Bitcoin's in that upcycle. Now I want to show you what I was talking about. Okay, our system has this thing, this line right here, Dave. This is also part of the current package. We call this the Ranger. Okay, these are Fibonacci retracement support areas. Okay, all you care about is that you want your price to be of it so you can buy dips. So what Bitcoin has been doing since August is that it put in a low here, okay? And this has been the A move till about right here, all right? And then what happened is that you have now consolidation starting here, and it came down and it touched the weekly support area. The important thing here, Dave, is it bounced. So now we have a C move happening. You have a measured move now between 63,871 for, basically potentials for $46,000, $47,000 move. And let me just zoom out to here. This ABC move will take you from this low at 49,000 into February at about 95,000. So that's the expected move right now, is that you have these parallel moves. You had a move, you had multi-month confirmation, you had a save at support, and it's moving higher.
Let me ask you though, those red lines, you already put those as projected forecasts out for the range that it's going to be in. So those red lines are your own add on top of where the range that you're looking for to come in out of that.
This is my expectation, because if it deviates from expectation, then you got to look at the trade, right? So, but that's just a weekly look back saying, hey, prices over the weekly, you look to buy dips, okay? And we've been pretty suppressed on Bitcoin all this time out. Going into October is very bullish for Bitcoin in general. Now we have an announcement for a Bitcoin ETF coming out. And see, Hekla's going through another upcycle now too. So it all depends on what you want to trade, right? So you have this thing here, you got a buy signal here. It catches up nicely at the bottom. So this is 541, right? You'd have been in that trade to about here, about $7. You're looking at what, $1.60 on $7. You're looking at a 20% plus gainer. We got another buy signal on Hekla, but it's not just Hekla. Look at wheat and precious metals.
And it's all about taking those consistent gains that are 5, 10, 20%, 25% exiting, instead of trying to get that, 10 bagger that comes through.
Well, that's a fool's game. So, and everything we do here, see, everything's very visually, graphically nice. So you have support here, right? We hit support. We got a change in the momentum readings, right? We're coming out of oversold. This is telling us that we should be buying. The worm tells us we should buy. You buy. See trade, take trade. And then you set your stop. And you'd set your stop right here. And then you could trail it as you want to. Or, you could hold it. And then when momentum starts to get overbought here, you could put a stop in under this price here. You get taken out, but you're taken out for profit. You see how this works? It's very simple to use. You want confirmation on your bull signals, and then you have tools to help you understand where the out should be. And if you notice here, this line is auto-generated too. So from the last high, so you can always put your target in at this price here, and you could have been taken out here, Dave. Okay, it pulled back, and now it's given another buy signal here for wheat precious metals. So, but rinse and repeat. NVIDIA, same way. Yeah, and you can set alerts on all these things too, Dave.
Yeah,
so
right.
you follow your own stuff. So, depend. People like to trade the SPY on the 5 minute. So, here you look at right now on Tuesday at the end of the day, we got a buy signal. Okay, and so look what happened. You ran right up, and then here it touched here. First thing this morning. So you would have bought it yesterday near the close. You would have closed it right at this bar right here. Okay, right at the open, boom. You'd have closed your trade out with a nice profit on options. Okay, and now it's consolidating back again. So you shouldn't be long if you're day trading it. You're going to watch this support area here. All our combo, our combo indicator pattern saying that we're consolidating, but this dark red meaning is getting oversold. And so you're going to start to look for an opportunity here to take another swing long, but it's not there yet. And it just keeps you out of trouble. You don't trade against yourself. A lot of people trade on hope. And here's every indicator is telling you if you're long, you should have been out. And just be patient. The trade will come. Okay, the trade will come. And if you notice here, look at this hammer that put in yesterday, right when it went from oversold to a flash of a green. Momentum trade, oscillation trade. Okay, the worm hit.
Yeah, that candle's showing a big move right there, isn't it?
Yeah, you'd went long here at 11:35, and that you could have started this trade even earlier. So, and that's a nice move if you're trading options. 10 contracts, that's $500 or $600. You do that every day, you're making $120,000 a year. So you don't have to swing for the fences to make the money you want to make. So I hope that helps people. It's really simple, and we're going to be putting this out towards the middle of October, and we'll have a little video on explaining how to use it and some markups. I already been marking up some charts for people. And basically see trade, take trade, and then you can modify your stops and targets depending on what you like, or you can trail.
You were mentioning alerts there. Now I set a 3.5% down and then a 5% down alert, because if they both trigger, I'm jumping right on that and right on the chart to see, because generally they rebound off of that. And that's just a quick way to, because, utilizing your charts there, if it's dropping 3.5 and then immediately 5%, then you're going to wait to look to see where it sort of hits in the bottom there. And then you can engage it and grab. And that's just an easy one to do. Because if you get both those alerts in a row, it's like, boom, flying over to that. Get out of my way. I'm going to trade.
Yep. So it's just really an easy and fun tool to be able to just pick your trades. And the nice thing about it is if you're wrong, if the algo does not perform, because it doesn't perform 1 out of every 3 times. That's just the way it works. You get 7 out of 10 trades are going to be good. Is that it gets you out with a paper cut, not a catastrophic loss. So, and that's what you want. You want your loss to be minimal, and you want to be able to let your winners run. And this helps you mathematically look at it versus your own gut telling you. And the only advice I'd give to you, Dave, is, that's fine where you have your stops, but, let your targets move higher. Sometimes I get myself all caught up in taking quick gains too, but you can let these tools guide you, if you will. So if you use this as your stop, you can
just keep moving it up,
and it keeps grinding higher. Almost every day now we're making new highs in gold. So.
You think we'll break 3,000 this year? You think we're going over 3 at this trajectory over the next 2.5 months? 3 months?
Sure looks that way. Remember, December is a big month for gold. And
yeah, it always is.
So I think there's a good chance, depending on if they cut rates again at 50 basis points in October, then I think you're going to see a pretty violent reaction higher.
No, you don't think they would cut that much that quickly afterward, do you?
They're already hinting at it. So I took it off. So I hope that helps, guys. I'd like to get your opinion, your comment in the comments on it. But it's really simple, straightforward. Multiple confirmations, take trade. Trade your time period that you want. Trade the stocks that you want, ETFs that you want. And I think you'll like it. It's definitely lifting our win rate up even higher than we've had it, which is pretty good. But the other thing, it just takes the stress out of everything. So now when you look at a buy signal, do I have confirmation? Do I have confirmation? I take the trade. If I don't have confirmation, I wait.
It's absolutely true. And that would be the same with good opportunities in life as well. I mean, how many opportunities are you presented with in life? Just as I wouldn't say as a Zen concept, man, for all of life, but that's truly what it is. In life, waiting for the perfect opportunities and with that perfect preparedness and that perfect timing. And, that overlaps right into that trading world as well. So it's just interesting how life reflects trading. And
So that's kind of what I want to share this month. I think October should be good for Bitcoin. I think we're gonna get some sort of blow off top going into October. The stock market can maybe move up to 6,500 maybe, but what I'm more interested in is what gold, silver, Bitcoin, and oil is going to do more than I'm worried about what Nvidia is going to do. So come trade with us, and I think you'll like it. What we charge for the service is nothing compared to what you get out of it. These tools are amazing. We've been modifying and enhancing these things for the last 10 to 12 years. So the tools work, and we're just trying to squeak out a few extra percentage points of win rate, which will make all the difference in the world for how fast you can retire.
remember, that's tradewith2030.com. Take a look over there. And Bob, I appreciate you coming on and sharing your expertise again. Always a pleasure. Until next month.
Yep.
Bye for now.
I'll see you. Bye bye.